All right, so Jamie, let's do this. Okay, welcome everybody to Wall Street Reporter's next super stock live stream. This is the company spotlight today with returning guest CloudMD, Dr. Issam Hamza, one of our top performing, or actually, yeah, the top performing stock over the past couple of months, up 500% since the late July debut. And we're going to find out now if it's going to be 10x or more from here. So, Dr. Hamza, we're hoping for some good news.
Yeah, thanks for having me again, John.
So it's absolutely always good to have you, because every time you come on here, it's always after, or in the midst of the company making some tremendous progress.
Yeah.
You've had some really interesting news announcements, which I kind of want to dive into, because it kind of looks to me like the company's kind of going into a whole new direction, or into areas which is the enterprise side, which I don't think we've talked about before. So maybe you can tell us like what your vision is like your vision for enterprise healthcare and what we're doing here.
Yeah, no, it's a good question, because I mean we put out so many news releases. Sometimes people lose track of the overall vision, right? And so if you look at our company motto, and really what we're after is, we keep talking about this patient-centric approach and revolutionizing the way healthcare is delivered. That's not just a motto. I mean, that really is, it comes down to where our company came from and where we're going, where we believe healthcare is going. And so to do that properly, you have to think about that person. And so when we talk about holistic care, whole person care. You're a complete person. You're not pieces of a person. And the way healthcare is delivered right now, historically, besides being very inefficient with, the way it's delivered, and you taking time off of work and crossing town, and one person not talking to the other person on the team, and so on. The other problem is we tend to carve you into pieces, right? As a patient, we tend to carve out, oh, you have, an injury. Let's carve out that piece. And you have now mental health issue, anxiety. Let's carve out that piece. And then, it just like there's these pieces, and that doesn't work. You can't carve out a diabetes piece, right? You're a whole person, and that's how we are. So this holistic view, it underpins our whole messaging in our company and the way we deliver it. And because of the way we created our infrastructure in terms of technology and doctors and specialists and the whole infrastructure behind what we talk about, we're now able to go after more and more parts of that ecosystem. So when we talk about the virtual care, right, that's part of it. But really think of you as a patient. You might have diabetes, you might have anxiety, you might get injured from work, you might be off work because of it, you might have some stress because of finances and so on, and you might need to lose some weight. Those are all different things historically that we've had to send you to different parts. What we're talking about is we can now keep you within our ecosystem and provide that full care. Now, part of it is you being a worker, right? Or you belonging to an insurance company. And historically, these huge employers, like these Fortune 500 companies and these insurance companies, tended to have these big contracts with different vendors for different parts of your care. So if you say to them, I need to see somebody because I'm so stressed out about my finances and I'm going through a divorce and whatever, they send you to one vendor that they pay millions of dollars to. And then if you say, well, you know what, I'm actually having depression and I need to do some counseling, then you have to go and see a different vendor that they may have a contract with. And then if you need to go see a specialist, you're on your own to find a family doctor, primary care, to do the referral. And that specialist is not talking to anybody else. And it was just a horrible system. And so what we did was, because we have that technology platform, the specialists, the primary care, all the doctors and the nurses all in our system, we're able to now offer an enterprise solution. So now we go to these customers, these big customers, Fortune 500 companies and insurance companies and so on, and offer them a package deal that never existed before in the industry. No one's ever done this before, where they provide, for their one patient, their one customer, their one employee, a one-stop shop, concierge service triaging, let's call it.
It's a real value add. I mean, for employees, I mean, it's a tremendous. So this has never been done before.
It's never been done the way we've been doing it. No, absolutely not. No one's ever kind of put in all the different pieces into one enterprise, one part of it. So if you look at some of the announcements we made, they start making sense now, right? You say, okay, great, you have primary care and you have direct consumer, CloudMD on demand, and you have now the hybrid clinics that they can be seen physically. But look at all the other pieces we just put together, Snap Clarity, so that you can download the app and answer questions, and it'll give you a mental health dashboard and connect you to one of 1,500 therapists across the country. And then if you need to see a specialist because you're injured, let's say, then you might have medical confidence getting you in. I can't remember the exact number, but something like 3 to 6 months faster.
And this is medical confidence. That's one of the recent acquisitions.
Yeah, so now they can get you into a specialist a lot faster because they know which ones have the best wait times around the province and so on. So they can get you in a lot faster and get you back to work a lot faster. So the return on investment for the employer is great. And then, you might need to you're going through a divorce and you're anxious. And so you might use Humanicare's service, right? Or you need a nurse to come do nursing care at home or whatever. Then you might use Humanicare as part of it. No one's ever put it all together in one. So now when we talk to these big companies, we can actually do a package deal, and it creates such more opportunity that no one's ever done before.
I think the best part, I think the thing that investors are probably most interested in is once you do the enterprise thing, you're not growing by you can grow by massive leaps. It's like you can go from, you're doing what, 35 million run rate. You can be doing, I don't want to put words on it, but you can.
Without you saying it, Jack, these contracts are big. These contracts tend to be 7 figures, right? Plus. And multi-year too. So they tend to be, 3 to 5 years and so on recurring.
It's a little bit like, some of the great business models, like success stories, like, ADP, the payroll processing company. I just saw a comment. There was a guy at ADP. So that's why it popped into my mind. But, because you're signing up, these large businesses, each one may have, 500 plus employees. And you do one after the other.
They're massive companies. Yeah.
Yeah, 500 is small, actually. You're talking about 2,000 plus.
Yeah, 500 would be very small.
Okay. So that's, and that's pretty much how, ADP just became, they actually literally became the massive super stock because of that massive opportunity of scaling. So this is really the scaling story here, the enterprise. Is that right?
And it fits in perfectly because no one's been able to now connect the primary care doctor as well into that. So if you need to go back and get a referral and see the primary care doctor, we have that part of our mix as well. We have the CloudMD on demand link to offer it as well to these employers. No one's tied in all the different pieces and the primary care, so the public, private, mental health, and physical health all into one, basically.
So it's really so it's a turnkey solution, which I think is kind of interesting. Now you're going into the U.S. and in terms of from a value perspective, is this your enterprise offering? Is this going to be like, price wise? Is it like mid range, top end? Like what's going to be the kind of the pricing? Like
we have Karen Adams that's joined us, and she's like a superstar in the space. She's really a pioneer in a lot of this, what we talk about with employment assistance programs and mental health services and so on in Canada. So she's really leading that division, and she can talk more about the numbers, but it comes in usually as like a base rate and then per employee as well, and then per month, and then usually multi-year contracts. So it can grow really quickly. And that's usually only for one piece. What no one's ever done is package, multiple pieces together.
And that's the key thing is all these that you're giving them that whole person health that really nobody else is doing.
Yeah, and we're telling these companies and these insurance companies, you don't have to triage on your end. You don't have to tell, okay, you have this issue, call this number. Or you have this issue, call this number. It's like, just send them to us, we'll take care of them.
Okay, I think it's a major. I think for like I'm thinking of the people who are probably like ideal customers for this is, look, you have a lot of these big tech companies, which money is really no object, and like a Google, Facebook, whatever it is, for them, look, their big thing is trying to attract top talent. So if they can offer this type of healthcare to their people, where it's like an easy thing, and look, people want easy, that especially look. These days, everybody wants convenience, easy, turnkey. They don't be bothered with. it's ideal.
Part of a benefits program. Yeah, exactly. It can be a differentiator in their benefits program.
Okay, so let's kind of go into the recent acquisitions. I mean, people have seen maybe the press releases, but maybe you can explain each one. And again, we're talking about the enterprise now.
Yeah.
Okay, so Humanicare, what's that all about?
So Humanicare has multiple different things, but really it's kind of an employment assistance program type of thing. So if you have short-term issues, stressors, they would help you. So let's say, like I mentioned before, you're going through a divorce, or you have some financial concerns, and you need to talk to somebody. That's where they help you with the short-term issues, basically. They can also have, I think they have something like Your Nurse. They have elder care services. Let's say your parent needs help. They can help, obviously, with COVID now. That's a big thing because they're trying to take a lot of the elderly out of these institutions and back home. So you might need elder care. You might need a home care nurse and so on. So they're kind of a short-term service for short-term issues with these employees. And now with Snap Clarity, they're able to refer off for the longer-term mental health issues, right? So if you need long-term counseling for your depression or anxiety, then now for the first time, you're able to kind of refer in to another one of our services, which is Snap Clarity, and get access to not only the proprietary dashboard through the app, but also get access to like 1,500 therapists across the country.
Okay, and in terms of in terms of revenues, like what kind of numbers are they generating?
Oh, you put me on the spot. We've done so many here. Humanicare, I have to look back and see what the revenue is. They're all very EBITDA positive, high margin. And the great thing about all these businesses, just so you know, is that the fixed costs are not, they don't scale the same way. So each one of these contracts improves our EBITDA margins considerably. And so every single one of these contracts that we're going to be signing actually improves the margin as well. So we're going to be able to scale very, very quickly. So they're growing very quickly. I can't remember the number. I think it's like 30-40% year over year already. And so we're going to be able to pour some fuel on that too.
Actually, I think I was in the 3 million, 5 million range. If I remember the press release somewhere.
Yeah, honestly, I have to go back and look exactly. I think it's around that.
There's a lot of these. I know you probably have a lot in the pipeline also. So it's like, okay. So speaking of which, you have like when you're doing these acquisitions, you have, I guess, like, is it a team that you have people doing the business development acquisitions, and then you have like an integration team, like so that you have.
Yeah, we do. It's a bit of our secret sauce, so we don't we're careful not to tell people how we're getting these deals and how we're bringing it together. But we do have dedicated teams as well as the whole enterprise kind of helping with them. And then with the integration, we do have dedicated managers that are helping with the integration of those divisions for sure as well.
Okay, we got a lot of questions coming in. We're going to jump into the questions in just a second, but I kind of want to maybe just if you get your take on the recent. So we talked about Humanicare, and maybe if you can talk about the Benchmark and also Medical Confidence, those two acquisitions we haven't really discussed.
Yeah, let's talk about Medical Confidence first, maybe.
Yeah, sure.
Medical Confidence, you can think of it like if you get injured at work, let's say, right? Historically, the way it's happened is you get injured at work, you have to try to get into your family doctor's office. You wait, if you do the whole thing about calling on a Monday morning and taking a day off and everything I talked about before. You finally get in, you see the doctor, your family doctor. They say, yeah, you're injured. You need to go see a specialist. And then you get a referral. So they create a referral letter. It goes to the front desk, the medical office assistant or the clerk there. Whenever they have time, they will fax it off to one of 2 or 3 different specialists that they have in their database. They don't know about wait times at all. So it gets faxed off. And then whenever that specialist comes back with a fax back saying, yeah, we'll see them in 6 months because our wait time is so long, kind of thing. And then that clerk now has to relay that message back to the patient saying, yeah, you'll see the specialist in 6 months and you're injured and you're sitting there with injury for 6 months before you get to even see the specialist. And then the specialist finally sees you. It's now a chronic condition. And they say, actually, you should be doing physiotherapy right now, or you should be doing this. And it's too late now because now you have, frozen shoulder instead of a rotator cuff injury or something. And so it's a horrible system. And now you're anxious, you're depressed because you've been off work for this whole time, you're financially strapped. What medical confidence can do now is they say, nope, we'll take care of it. We're going to get you in a lot faster. And they tend to get in faster to, I think something like, if I remember correctly, 3 to 6 months faster than historical numbers. And so you get back to work a lot faster. Your return on investment as an employer is a lot better. And so they get a lot of business that way because it's in the employer's interest, not only the patient's interest, to get better faster and get back to work faster, correct? So that's really their secret there. And we don't talk about how they do that too much, but that is why we bought them. And it fits in amazingly well to all the things that we just announced.
Okay, so your enterprise offering, this enterprise platform, it has a lot of really value, high value components, which
you get return on investment. Yeah, absolutely. Yeah.
Okay, so I mean, even one of these components could be like the key to getting that contract.
Yeah.
Like this, medical
that's exactly it. I mean, each one of these on their own are independent vendors that are standalone and getting these contracts on their own. Now imagine putting them together.
Okay, so so each one kind of gives you an additional edge, an additional competitive advantage nobody else has.
And we can cross-sell. So if you look at again, I don't have it in front of me, but some of the names in terms of customers on their website, if you go to Humanicare or Medical Confidence, you see who they work with already, some big companies. We're going to be able to go to that same company and say, hey, did you look at our other services that we can also, you're already a customer of ours, look at all this other stuff that we can package.
Okay. All right. So let's jump into some audience questions. And okay, so this question from Clifford kind of ties into some interesting things. He's asking, how long do you see this taking to become a household name in healthcare as the entire telehealth sector grows?
So I think he's talking about CloudMD as a whole being a name. We went from being quiet on purpose all of last year. We didn't talk about our company. We didn't do any marketing. We wanted to get the infrastructure and the footprint built out. This year, we slowly started kind of getting some attention. We're definitely getting a lot more attention now. So we're getting a lot more inbound for sure. People hearing about us. I think we're north of 400 million market cap at this point. But this is just the beginning. I mean, we talk about the hockey stick and everything else. I mean, this is the very beginning of a very big industry. So he mentioned telehealth. Telehealth is only one piece of healthcare, right? Like we're talking about telehealth unleashing a massive opportunity to get efficiency and access, which is what our company is about. But we're talking about a massive industry, and that's revolutionizing the way healthcare is delivered, creating that holistic patient-centric care, that full ecosystem to you as a patient, almost concierge service. That's new. That's no one's really kind of put all the pieces together like we have. So we don't see this as we need to make our name to be the biggest company in the world or whatever. We're very methodical. We know we're not going to get ahead of our skis, but we're also going to grow very, very quickly. We have over 50 million in the bank right now after our last raise, and that's post-close of all the acquisitions. So after we close all the acquisitions, we'll still have north of 50 million in the bank.
After everything right now closes, 50 million plus.
We'll still have 50 million plus, and that gives us a base run rate of 35 million, I think, or 35 million already base without any organic growth or without any other acquisitions. So we do see a great future. We have a strong pipeline as well in terms of organic and inorganic growth opportunities as well.
Okay, so really, I think we're really talking about this is beyond I think right now like cloud is kind of pigeonholed into this telehealth space, but really your vision is really beyond just the telehealth. It's a whole new kind of a new level of healthcare. It's the future of healthcare, basically.
100%. We've been saying this from day one. I mean, we've been saying we've been using telemedicine for 7-8 years now, right? Like even before COVID. I mean, we've said this. We pounded the table on telehealth. We're one of the very few companies in Canada that was actually actively promoting telehealth before COVID. I mean, we've been doing this. If you look at our decks and our information from day one. Why telehealth is important is it increases access to care and increases efficiency. And so with our model, it if you think about it this way, Jack, I think I told you this already, is we're putting all the pieces together in kind of a jigsaw puzzle, right? To create like a 2D platform. And once you have that platform, we have the ability to have a 3D model above it, and think of it like a cone-shaped model. So a small footprint of this puzzle pieces, and then a massive, massive vertical cone shape above it, you know, growing with higher and higher margins because you have that infrastructure built out. And that's really what we've done here, is we've put all the pieces together, and now we're growing that vertical very quickly.
Okay. So that's very interesting, because I mean, this is like right now people are, you know, I think, you know, they value you know, the telemedicine stocks one way, healthcare companies a different way.
Right.
But this kind of opens CloudMD to almost like kind of getting a whole different type of valuation. I would say almost like a blue sky type, because nobody else has these pieces.
No, and you'll see a lot of companies now. I'm not going to say anything bad about any other company, but I mean, you do see a lot of companies coming now, getting attention, saying that they're a telehealth company because it creates that buzzword and they're able to raise money or whatever for it. But then you look at their business plan, it doesn't make any sense. They're just kind of following, trying to get some revenue from just being a COVID play, let's say. That's not what we're talking about. We're talking about revolutionizing healthcare, you know, for the first time, and just in a brand new way, really. It's a revolution of healthcare delivery, which is massive. I mean, that's a $4 trillion North American market.
Yeah. So basically, I think the takeaway from that is that you know, the valuation of the market for CloudMD could be, you know, far beyond what a lot of these, even like the teledocs or the pure whatever, you know, the telemedicine stocks. So it's
revenue too. I mean, the revenue from these transactions are really, really big, right? And so if you can get the same multiples on that kind of revenue, yeah, you can grow very big.
Okay, so you have a run rate of about 35 million right now. You have 50 million in the bank after all these deals. So, and again, based on, I remember I saw the report from Canaccord. I mean, they kind of had a model of, you know, how that, you know, that capital can be deployed, and all of a sudden that becomes another, you know, 50 million plus in revenue. So let's say, is it possible that you can close out 2021 with 100 million run rate?
I'm not going to give projections, Jack. I mean, okay. I won't do that.
Okay.
But I mean, you can look at our track record.
Okay, so you were doing last year. What was the run rate last year?
I think our run rate was like at the end of last year. I think it was like maybe 11 million.
11. Okay, all right. So so you don't. I'll say 100 million exit of 21. I'll say 100 million run rate, and that could be, you know, why not the 20x revenues? I mean, compared to peers. Okay, so let's jump into the audience questions. Graham is always Graham with the great questions. Okay, so Dr. Hamza, congratulations. Oh, wait, no, he had the question. I'm sorry, this is the real question. Any plans to expand this enterprise approach into the U.S.?
We're being very careful how we talk about our U.S. Side as well, just because it is very competitive, and we have, I think, a great model down there. We do want to get a bigger footprint before we start elaborating more about what we're going to do. I've given before kind of talks about the grand vision of what we're doing on a higher scale. And then once we start announcing more of a footprint, then we'll definitely talk more about that.
Okay. So, so basically the U.S. expansion that's in the works. I mean, this is.
We did Benchmark. You mentioned Benchmark earlier. Yeah. So, and that's 5 million US, almost 5 million US in revenue already. What it does, Benchmark, if anybody's familiar with it, is an electronic medical records company, and they have something 5.5 million patient charts in their system. I think over 800 doctors using it in 35 states. Why is that important? Is that it gives us the ability to operate now in almost all of the US with a platform, a really amazing platform. It's fully integrated. It has telehealth built in. It has patient automation tools, has AI automation. It has like just amazing stuff with HIPAA compliance. But now it gives us that same platform that we have in Canada in the US, because the US is different. Like every state is like a different country in terms of the regulations and their billing and HMOs and insurance. I mean, it's really different. So if you have the infrastructure already built out in terms of billing and software and EMR, you basically have the heart of a clinic, really, because that's the heart. If you have control of their billing, the ability for them to bill, that's really how you get your foot in the door in doctors' offices and clinics and so on. We have a hold of that heart now, basically, in the US, and we're going to be able to kind of grow that footprint across the certain parts of the US with that piece.
Okay. Wow. Okay. And everything else, the other parts that you have can also kind of be cross-sold into it, like the education side. Was it, I remember IMD was that could
IMD
be
and everything else. Yeah, no, I mean, everybody's getting the idea now. Like we bought these companies for a reason. I mean, it translates extremely well on both sides, actually internationally, right? So it's an easy transition to different languages and different areas and so on. But right now we're focusing on North America for sure.
Okay. So that's so we're expecting a lot more news flow in that direction. I guess that's kind of a preview. Derek is asking, when do you anticipate users will be able to see the same doctor consistently?
Yeah. No, it's a great question, because I mean, a lot of people say, can I just keep following up with the same doctor? Can I see their schedule? So the answer is yes. The answer is you will soon, get the ability to pick and choose which doctor you want to see, maybe their interests, maybe their language of, their native language, and in those kind of things. You'll be able to start doing that over the next couple quarters, let's say. The reason that we haven't turned that on yet is that we want to make sure we have all the puzzle pieces together first. We are always very methodical in how we do things. You have one shot with kind of customers and patients and employers and so on. So we want to make sure we build the correct infrastructure first before you turn on a lot of these things. You're going to start seeing other things as well, like I think that you'll be very impressed with. But that's the fun part, is that we built the base here, and just a matter of turning on things now. We're a true tech company with I don't know how many developers in-house and support and staff across North America. So we're able to kind of tap into that, our own team, and build that ourselves.
It's funny, because we're always talking about the new acquisitions. That we haven't really talked that much recently about the kind of the IT side and the value that you have there with the data, the big data and all that, which is could be worth the valuation of that could be just as much as what you have now. I mean, if it's split out almost.
Yeah, no, definitely. There's a lot of value there. But there's also a lot of value in the footprint. These bigger companies like the Teladocs and the Googles and the Amazons of the world, they don't tend to start something from scratch and build it out, right? Like they tend to buy companies that already have a footprint in whatever space that they want to get into, and then that's how they grow. So we're building a footprint that never existed before, that everybody is going to see some value to, real quickly here.
Okay. Is that a hint? Is that a hint for Jeff Bezos?
If he's watching, yeah, call me.
So basically, okay. So the takeaway is, as the footprint grows, the valuation expands. At some point, a major player, if they see value in being positioned in the future of healthcare, could make an offer at a significant premium.
Yeah, someone mentioned kind of when are you going to be a household name or whatever. We're getting a lot of inbound right now. Like people are starting to see our name and understand kind of where we're going and what we do, and we're definitely getting a lot more inbound than outbound right now.
Okay. So let's go into a question here. I guess we get this a lot, which is what prevents Teladoc or somebody else from competing with CloudMD.
Yeah.
What's your moat?
Yeah. So Teladoc is already in Canada, right? But they don't have the footprint we do, and it goes back to what I just said just a second ago. Teladoc doesn't tend to grow from scratch. They tend to acquire the pieces they need in that space. So they're in Canada and they're trying to expand their footprint in Canada. I will leave it at that.
Ooh.
That's they bought In Touch for 600 million US.
Right.
They merged with Livongo for a reason. The space is not huge. There's not that many players, right? But there's some massive players. And for anybody, there's going to be consolidation. I've told you about this before, Jack. I think, in the market, you tend to have consolidation on two sides, right? And two parts of a curve in an industry. You have at the very bottom when no one cares about that industry, and you get like distressed assets. And then you get it closer, as it gets hot, and you get it near the top when people are just trying to grow really quickly. Big companies are trying to grow really quickly by acquiring other smaller, medium-sized, and companies and so on to grow. And so we're at a point, I think, in the space that the big companies are aware of where they need to go, and there's not that many players out there.
Okay, that's good. So very interesting. So you're on their radar, basically.
I'm not gonna say anything more at this point.
Okay. But basically, I think like a Teladoc or any of these anybody who wants to be a major player, they have right now at this point, the valuations are so high from they're under tremendous pressure to do deals, to grow. They have to grow.
They have to grow through acquisitions. Yeah, no, for sure.
So this is
around the world. Yeah, for sure.
So speaking of your acquisitions, Justin's asking. Okay, so with all the ton of M&A recently. How do you pull it off from a sales standpoint? Not price yourself out with clients.
Sorry, can you put that up again? How are you putting it all together? How do you pull it all together? Yeah, no, like I said, we have dedicated teams that are actually fully integrating this already, and so you'll be surprised, I think, how fast.
I think maybe he meant like with the enterprise side. If you're putting, if all of a sudden your package, everything you're delivering, you have all these elements.
No, it's
so expensive that it doesn't compete. Or no?
No, it's a la carte. So I hate to use a food reference, but you can buy the individual pieces of sushi, or you can buy a bento box kind of thing, right, at a discount.
Okay, we get the Quebec question a lot. What's any update on Quebec?
Yeah, no, it's definitely on our radar. So
okay, yeah, we get that a lot. Okay, so we got a bunch of questions about TSX, other upgrades. We got a bunch of those questions. Anything?
Yeah, the answer I said before. We're a $400-some million market cap company. I think we're like top volume and dollar churn every day. I think on the TSX venture, we know that we'll need to graduate at some point in the future. We're definitely working towards that right now.
Okay. Yeah. So here we go. So yeah, the TSX. People like that. Here's a political question. Will there be a fast if Biden gets into, I don't know, if Biden gets in, will there be a faster expansion?
It's either one. If Trump was there pounding the table for telemedicine and expanding Medicare and Medicaid coverage of telemedicine across state lines, can you imagine what Biden and the Democrats will do when they talk about universal health care and expansion of Medicaid and all that kind of stuff? So the answer is we're good either way. They both understand the value of this. Biden looks like he's going to win, and definitely the Democrats tend to understand the value of access to care.
Yeah. EAP. How do you? Do you see the question there?
Yeah. Is he talking about on the U.S. side? Yeah. Like I said, our main focus right now was Canada. We're still building out the U.S. side of that, but the Canada side of it, I think we're definitely making a splash very quickly here.
Okay. Here we go.
They already have a nationwide support, so they have access to 1,500 therapists across the country already. It's like right across, so it's already national.
Okay. Oh, we got like, I just realized we got like 200 questions. I just can't. So we're trying to like triage here, but okay. When can we expect the new acquisitions to be integrated into the platform?
Yeah, we're working on it. I'm always careful not to give dates so that you don't disappoint as well, but also that it has to make sense for our company and how we do it. But the last thing you want to do when you do an acquisition is to go in quickly and change everything, right? To go, okay, everybody stop using this, use this now. So the first step is just to kind of go in, merge the cultures, merge the teams, and then over time, work on the full integration and the full efficiency. That's besides the point. Like, you'll be able to capture that revenue even without that full integration from the beginning. That improves efficiency and in the long run, but it doesn't restrict us from getting access to those big contracts right away.
Okay.
More right now.
Okay. Darren suggesting a look at Medex Health acquisition in combo with dermatology clinics.
Yeah, no, I know Medex. Yeah, but I'll look at what they announced.
Okay. Let's see here. Terms of the Mississippi clinic?
No, we will not. It's very competitive right now, and so we want a bigger footprint, and then we'll start talking about it.
Okay, here we go. Are all the acquisitions going into the CloudMD app?
Sorry.
So in other words, is the app going to have basically the CloudMD? Yeah, I guess that's what he's asking.
Eventually, you'll have a lot of pieces. Yeah, that's a good question. So right now, you might be able to say, I want to see a doctor, make an appointment, or I want to see a doctor right away with our CloudMD on demand service. I might want patient education with IMD, and that will be built into it. I might need some mental health support, and you might click on it and launch the Snap Clarity offering, and so on. So yes, absolutely, those are all features that we're going to keep, and that's why I talk about having an internal team. We're going to be able to we've already started that process, basically, of integrating a lot of these features into that unified direct consumer app as well.
Here's an interesting one. Do you have any plans for addressing preventive healthcare?
Yes, absolutely. I mean, it goes back to our mission statements, right? Holistic care, whole person care, providing better outcomes for the patient, which is a win-win-win for everybody. I mean, that's the whole point. This is where we come from.
Well, the recent acquisitions in Q2 and Q3.
Right. Most of the acquisitions were in Q4. So it'll be more in the Q4 numbers and then Q1 as well. So it depends on when you close these. So you're going to see more of that revenue coming in as part of Q4 and definitely of Q1. And we'll just continue adding to that.
Is Benchmark the Trojan horse for conquering the US?
That's actually a good analogy. Yeah. EMR I call like a Trojan horse, right? Like EMR and billing. So we have, it's not just EMR. EMR, electronic medical record, is just the chart part of it. But if you control a doctor's or practitioner's billing, then that really is the Trojan horse. There's nothing, like, doctors love taking care of patients, but they also want to get paid, right? And they're not sometimes the best business people. And so if you make it so intuitive and easy for them, and you find inefficiencies in their billing, and you make them money from even that part of it, then you really have a loyal customer for life. And that's what we have on both sides of the border now with our Juno platform and our ClinicAid billing solution. ClinicAid does like 40 million a month in billings for doctors in Canada, and then Benchmark on the US side.
Okay. Here's an interesting question. What's your biggest challenge for expanding in the US, and how do you overcome the challenge?
That I can't travel there. I like to travel and meet the people. I mean, I try to do as many virtual as possible, visual, and I have to see them and talk to them. But it's about cultures, and you want to make sure you bring in a culture that fits into your overall organization. And so far, every single one we've been very lucky have been, because what's more valuable than even the asset are the people, the team, because everybody keeps asking, like, how are you going to get enough members to grow that division? I'm like, that's what our acquisition was. They are the members that are going to be part of our team growing that division. They're already great operators in that part of it. So not being able to travel and meet everybody on the US side, I've definitely been traveling in the Canadian side and meeting people. But on the US side, eventually, hopefully the border will be open and we can start doing that too.
Okay. Hang on one second. So we got hundreds of. I mean, we get. It's a lot of questions coming in. It's if you saw it, the chat is going crazy here. So sorry about the delay. I'm trying to get to all the questions.
Yeah, no worries.
We got, you have about. I think we have another presenter coming on after. You have about maybe 5 more minutes. You want to go?
5 more minutes. Yeah.
Okay, 5, because I know we're gonna have just overwhelmed with questions. We're gonna have to really figure out how to do all this. Okay, so how far down the pipeline is the adaptability for patient?
Yeah. So those are some of the features, like I said, we'll be turning on in the next couple of quarters. We'll be able to start turning on some of these things. I actually believe that the Apple Watch and Apple in general are going to be a really important integration for sure. You saw the new one with the oximeter and the ECG and all that. Imagine now if you can capture that information in one format. So from the Apple Watch, from your scale, from your your exercise program, from your eating habits and so on, and then sharing that and sending it to your doctor or your practitioner in one kind of dashboard. That's interesting.
Okay, let's see if we can get like maybe 3, 4 more questions, and then we'll let you get back to work here. So okay, we got okay, guys saying don't sell Cloud yet. We want to see the stock get to at least maybe what if somebody offers $15 a share?
Yeah, I mean,
any comment on this?
Sorry.
Do you see a potential merger with Well?
Yeah, I mean, Well is a great company, and Hamid is a great CEO and doing an amazing job. I mean, their stock is at I think $8 and 1.2 billion right now. So they're definitely leaders in the space in Canada as well, and we like them a lot.
Okay. Let's see. Here we go. Is your technology ready to handle millions of patients?
Yeah, I mean, we already have millions of patients on our platform.
Okay. What about so mental health platform Talkspace faces challenges to provide therapy nationwide due to state line certifications?
Yeah, so we don't offer mental health like the Snap Clarity offerings in the US. Like I said, we're focusing on Canada with our enterprise solutions right now. We're still building the infrastructure on the US side. We're very careful about growing into the US. We're very methodical. We're very careful. We're always looking to do it in a smart way. We're not going to just spend $50 million and take on the big players in the space and think we're going to be the biggest name in the US. That's not how we operate.
Okay, here's an interesting question. Once you start getting some of these big enterprise customers, will you be putting out press releases about them?
Yeah, so the answer is yes, for as much as we can. It depends on the customer. When you come to mental health offerings, it's been destigmatized, and it's actually been something that everybody wants to talk about. So it's often in the interest of the big customer to talk about how they're supporting their workers in the mental health or recovery and support and so on. So it's actually usually both sides want to put out a press release.
Okay, so in theory, we might see some news flow in terms of big enterprise customers in the next few months.
Hope so.
Okay.
Yeah.
Here's an interesting question. I think people have asked in terms of the recent financing. Do you have any comments on how that might be affecting the stock price?
It's a bought deal. So it's a bought deal that is immediately tradable, but the people in it that have come into it, the funds and the institutions that have come into it, are very sophisticated, and so if they really wanted to leverage it, they would have shorted it by now. Our volume, I don't know what the numbers are, but I think we did over 200 million in shares traded in the last month, I think. So we have no issues with churning, and so if someone was already shorting that bought deal, they would have done that already. So I don't see any downward pressure. But again, I don't really worry too much about the day-to-day stock price. I think what we're building is much bigger than that.
Okay. Excellent. Okay. Last question, and we'll let you go. What else? What other kind of news flow can we expect? As we get into the end of the year, we're already in November. Any kind of big items you have coming up to close out the year with the bank?
You always ask me the same thing different ways to see if I get a different answer. I can't talk about what we're going to be announcing or even what we're hoping to announce. But you know that we do announce a lot of things because we're working very quickly. We're working 24/7 basically. Everybody is in the team, and we have amazing people on our team, and they're all bought in to our growth. And so we're always working hard. Just keep an eye on it. I think I've given enough hints on the big picture of where our vision is to get an idea of where we're going and how fast we can get there.
Okay, excellent. Dr. Hamza, thank you again for joining us. We look forward to having you back, hopefully very soon, with an update on some big deals, some big events, and we'll see you next time. Thank you again.
Thanks, Jack. We'll see you later.